Hey, Chris Miles here, anti-financial advisor here with Money Ripples. Hey, I wanted to share, an actual real case example here, a real case study of somebody I was speaking with recently. A lot of you guys will say, yeah, but how do you guys do what you do? What's the difference? What is anti-financial advising? Well, I want to give you a case study here of somebody that we're talking with right now and looking at hiring us. So these people were actually both about 40, this couple. They got two young kids. They really want more freedom, right? I mean, that's ultimately what it comes down to. She had actually just sold off her dental practice and is looking for that next phase in life. She could go back to work as an employee for somebody else, but she's wondering if that's really the path she wants to take. Her husband's also starting to work as well, but there's not a lot of income coming in currently, even though they have lots of assets. In fact, they are like the Dave Ramsey poster child, right? Because these people are 100% debt free, zero debt, including their mortgage. House is paid off, no car loans, credit cards, nothing. And they've got roughly about $1.6 million that they have that could be used in different ways. Some of it's in savings, some of it's in like the stock market and retirement accounts and things like that. The biggest risk I saw in their situation is that they are actually exposed to stocks. They have $250,000 in actual individual stocks that their financial advisor has been recommending, right? They've also been in different mutual funds, and they say it's kind of conservative, but in truth, they're actually investing in big companies. So even like the Googles and things like that, which are been hit the hardest. So she talked about where one of her accounts went from about 490 down to 455. Guys, that's a $35,000 loss they've had year to date already. Just in the last month and a half, they've lost 35 grand. And I tell people that there's only with one thing more expensive than education, and that's ignorance, right? Like not even realizing what's happening, or when things come down, you lose money, it's much harder to dig your way back out. Even to make up that difference, you'd have to make nearly a 10% rate of return to get back to where she was. The problem is the markets, can we really trust them after going up 13 years in a row? So a big thing we're talking about is, hey, how do we protect that money? How do we keep you safe? And that's their big concern too. They don't want to do anything that will cost them to lose their money. But here's the one thing their financial advisor hasn't done. They haven't given them any kind of idea about how to create income now. Everything's been about for the future, right? In fact, they even discouraged her from selling her dental practice. And then after she sold it, she had a bunch of cash to invest. And they're like, okay, now we like you, right? Because they get paid commissions off this. When she asked them, should I do real estate investing to diversify my portfolio? You know what they said? No. They said, don't buy real estate. It's too risky. Why did they say that? Because they don't get paid when she invests in real estate, right? That's the truth. In fact, they only want her to invest in things that, again, they only offer. So again, I was like, do away with all that stuff. Get away from that. You can actually do alternative investments where you get, at least a baseline of right around 10% rate of return. You can get a little bit higher. You can even get a little lower depending on what you choose, but usually right about 10% is pretty typical. So here's the thing is that if she were to try to retire right now, again, $1.6 million, if she had it all invested in the stock market, again, $500,000 of this 1.6 million is sitting in savings right now. She invested it all into the stock market, into retirement accounts and things like that. Even if they could retire, even though they have to wait 20 years for some of this money because it's in IRAs and whatnot, even if they could retire, it would still only be, if you lived on 3% of that, about 48,000 a year or $4,000 a month, right? Before taxes. So after taxes, you're really more like 3,000 a month, right? So yay, 3,000 a month. So what? Now I told her, I said, based on the savings you have here, we could take some of your savings, we leave 100,000 of it for emergencies. That's liquid. You can access it right away. So we don't touch that. Although we're going to do some things with it to make more money than just that. I didn't put that in the calculations. But be able to invest the cash they have, maybe even use some of the IRA money because now they're showing like zero income. We might be able to take advantage of some of the IRA money and use that to invest as well to create passive income. And so already I said, within 1 year, we probably can hit about 75,000 a year of actual passive income, money coming in. On top of that, right? There's all the money in those retirement accounts. What if we move those into self-directed IRAs? And what if you start investing with those? Even if you only earn 10%, that's another 80,000 plus. So I said, now we've got money really working for you because between the two, really we could be making you about 150,000 or so a year. Not 36,000 or 3,000 a month after tax, but actually getting that money working, right? 150,000. And if you keep reinvesting that and building it, I said easily, since her goal is about 10 to 12,000 a month to be really comfortable, I said you could easily do that within 5 years if you reinvest this and do it the right way. And guys, it's not rocket science. Really, it's not. Now, it might sound like it. And her big concern was, yeah, but could we lose money? And the truth is, yeah, there's risk in everything, right? But I see way more risk happening when you're investing in the stock market, especially after it's gone up for 13 years, which has never done that much in history. To watch that correct itself means that your money goes with it. So this might be the best time to not be in the stock market, right? The best time to actually be doing other things to ensure you preserve that money. Because remember, she already lost at least just in one account, $35,000 just from the market tanking. I don't think we're done yet. And that's not including the money we could make her too. So really, if you start adding what they've been losing compared to what they could be making, it can be much greater than just 150,000. It could be more because we don't lose money. We keep it in places that are safe. They have good, consistent, predictable returns. And where are those places? Yes, it could be like rental real estate, but it doesn't have to be you buying an actual rental property, even if somebody else manages it. It could actually be you investing in a fund where they invest the money. It could be investing into what's called a syndication, where they buy it into apartments or self-storage or oil or mineral rights or whatever it might be, right? Where you can actually make money off that. Again, you're hands off, but you get paid a big chunk of the returns that they're making on that investment. All these kind of things that you could be doing to be able to get your money working harder for you, so you don't have to work so hard for it. And that's what I told her. I said, you don't want to go back to work, do you? She's like, well, I could do 2 days a week. I know it sounds horrible that I don't even want to work 2 days a week. And I said, no, that's okay. Like, you probably want to work and do something, but you want to enjoy it too. And most importantly, she wants to be able to have that freedom that she wants to take time off. She can. And what better way to do that is when you start creating actual passive income coming in each and every month, each and every quarter, coming on a regular basis, which allows you to have those options to be able to step away from work for a time if you need to or want to. That is where real freedom comes in. Freedom is not from how much money you make in income. It's about what do you have in actual passive or residual income coming in that allows you to have the option to step away if you need to do that. So that's just one example right there. And I said, hey, this is a no-brainer. You're going to make way, way more money than you pay us. In fact, the funny thing is our fees are actually going to be less than what they're paying their financial advisor, and the fees and the management fees are going on right now. And so, it's just, it's like, to me, a no-brainer at all. But I want to give that as a real example of real case study, that these are real people with real chance of success, real hope possible, to give them so much more freedom than what the traditional mediocre financial advising world gives them. So guys, if you have questions on that, you want to know how you can do it for yourself, reach out to us at moneyripples.com, go to the contact us page, and you can reach out to us there.